Okay, hello everyone. It is Red with Red Dragon Bear. RedDragonBear.com. Red Bear Dragon. RedBearLeo.com. Anyway, it is a wonderful day to be a bear. As you can clearly see, it looks to me like the top is in, finally. The fake print on the Dow, or the Diamond Spider Trust of 118.16 was finally hit after months of waiting. And the market pierced it a little bit yesterday and little teeny up day today, and then that was it. It was down from there on out. As you can see here on the 60-minute chart, sold off hard. We did hit support. I am expecting an update tomorrow, and I'm hoping for one. And here's why. Every time we've had a major move down, there has been some violent up and down swings before it finally tanks. This is normal, as they do not want the bears on board when they really tank the market. And they don't want the bulls to be able to get out either. So they want to trap them, give them plenty of opportunities. Go up, down, and reversal, or reversal, or reversal. They did this over here. When you looked over here in this area here, back here in May, you can see they went down 1, 2, and then they went up 1, 2, faked everybody out. Then they went down again, and then they went back up again, and then they finally went down after they shook everybody out. Now, I don't know if we're going to have the same kind of scenario here where we're down, up. I don't know if that's the case, or if it's just going to just have basically just one. In other words, here back here that tomorrow we go up, then Friday we go down, and then that's it. I mean, that might be all she wrote. So, but you got to understand, the bulls are still in control. That we haven't turned on the market here, as far as all the moving averages and things like that. The 50 and the 20 and the 10 here in gray. None of this is turned, down. So as far as the bullish case, the bulls are still looking at this as just a simple pullback. That's all they're looking at. So you're going to have the bulls that buy into this, and they are most likely going to take it up tomorrow. There's multiple reasons for that to happen, although I don't expect them to take out this top significantly. They might pierce it, but I don't think that that's going to be the case. And I say that because they gave us a fake print as to where they're going to take it. So, looking at that fake print, which is right here, you can clearly see they threw this print out. Now, this panicked me, and I did bail out. I bailed out too early because we did have another leg down, and basically I seen one big long sell-off and a 2 and a 3, and I thought that this was it. Or actually, to count it, actually be a 1, a 2, a 3, maybe a 3 down to here, then a 4, then a 5. But it really wasn't that way. I think it was be more like a 1, a 2, a 3, a 4, and then we had a 5th wave down or something like this. Or maybe this 3. Usually the 3 wave will have 5 moves in it sometimes. So maybe this was 1. And then this whole move from here down to here was a wave 3. Inside the wave 3 there was a 1 up, 2 down, or let's see, 1 up, 2 down, 3 up. Well, okay, that's why I don't do Elliott waves. Sorry, guys. Just trying to guess at these waves, but regardless, we did have another leg down after this, and I should have known that. I should have known that this was a signal of what's going to happen. So, so I got out with a small profit. But hey, I'm a happy bear because a small profit is better than a large loss. So, for those of you who stayed short, stayed the course, great. You made a little bit more money, and hopefully you got out there at the close, because I do expect them to move it up tomorrow. And there's a multitude of reasons, and that's because I think that we're at a topping phase. So you go back here and you see this, and whenever we are at a topping phase, there's typically these days like this where you're going to have these up down, like here, you know, up down, kind of puke your guts at bears as we wipe you out, a squeeze. That's exactly what it is. And then they take it down for real. They kind of did it here, where they went up and then they tanked back down, and then they went up again, and they went back down. And so, and they did it here. It's more, it shows up a lot better here as two up days, one big down day, another up day, as opposed to this one here. It's not really quite like it, but it's similar because of where the top is. If you can look right close there, you see where the top is. That might have panicked a lot of people. You'd have went up, then sideways, and thinking that it was going to tank back down, but then it went up again, and then they finally went back down. So my point being is simple, is that there are these wild swings, and they either create an all up day and an all down day, or they'll create these long candles up and down, and then they close in the middle or something like that. They do a spinning top. Either way, they are wild swings, and we kind of want it to look like this if we want the big move down. And and that's exactly what I expect that's going to happen. We're going to have something similar to this right here. So will we have another down day tomorrow? I don't think so. I just don't think so. The volume was way light, very light today on the SPY for such a large move down. We didn't get nowhere near 200 million. And that's what we need, in volume. It was 151 million. Here's what's showing here: 151,958,000 or something. So it's showing that I see. So about 152 million. That's nice volume, but it's not panic volume. Okay. So, and then the Dow. Well, look at the Dow. I mean, what was the Dow? It did down 12 points or something. Ridiculous. It didn't even go in stride with this, so it didn't match up with this. Although the Russell did take a nice big long red candle down. It dumped really hard. So that's telling you, that's those 5,000 stocks. That's even more of a better gauge than the S&P 500. See, so there's more stocks in it. So that's telling you that I do believe that the top is in. This is a done move. But so for tomorrow, anyway, what I'm expecting here, pretty simple, is just looking at the 60. You can clearly see we are very oversold on this. We should pop back up. That's just all there is to it. We should pop back up. Now, we are oversold here, but the only place we're not oversold is right here on the MACDs. The MACDs are just getting ready to cross the zero line. Okay? Now, they could, if I'm wrong on this, and they have another down day tomorrow, they could bury this thing all the way down to negative 5.0 or 5 or negative 7.5. They'd really bury it, and the market would really tank off hard as it goes down. And that's a possibility. But I don't know. I don't think that that's going to happen because there's just not enough volume really to support it. So that this doesn't make sense to me that they're going to make it that easy. We really don't want that to happen either, guys, because if you want this to be a big bear move down, you don't want a nice 2 or 3 or 4 day move down only to be reversed by another multitude of weeks of crawling, inching your way up day by day, slow road to hell is this garbage right here. You don't want that. You don't want to sit there and just fight that, like they did right here. They kind of moved down quite steadily, very steadily in a controlled fashion. Sure, it was a nice move down, but this is not the end of primary wave 3. I mean primary wave 2, as we wanted it to be. We thought that was what it was going to be, but I believe that this 118.16 now that ends primary wave 2, and what we're getting ready to have here is primary wave 3 down, and it's going to take a multitude of waves down here. You look at it on the weekly chart, and what I'm saying is this whole move from March of 2009 all the way up to here, primary wave 2, P2, we're getting ready to hit P3. And this is the nastiest wave of all. So we'll have a wave one down inside it, which I am just guessing that this move is going to go down to that 106.47 fake print on the SPY, which, if I can't find that for you here on the site, go down here to photos and click. I know I loaded it. The 106. Let's see. Boom, 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 boom. Where are we at here? Is this it? Nope. This one it? Wilshire? Nope. I swore I loaded it. It's 106.46, I believe. What's this one? Nope. 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 I guess I didn't load that one. Sorry, I'll have to load it, gang. Anyway, just to let you know, I'll load it on here. But this was obviously what we did for Phil. That's not this one. What am I saying? Not this one. Not this one. Not this one. Nope. Well, there's our 8,000 print. As you can see right there. That'll be probably later this year, but summer sometime, I suspect. 8,300. It's actually 8,300. That's what it is. And there it is again. Another shot of it. 8,300. These are all down here on this photo button. You can click on them. You can right click and go full screen. And voila, looky there. Isn't that neat? So when you go right click and go full screen, right click again, exit full screen. A lot of you guys didn't even know these were down here, so I'm putting a lot of these prints down here for you. Anyway, well, I'll have to upload that, but maybe I got it here. I think I do. If I can get this to load. So here we were with the 118 prints now fulfilled. It's done. It's no more. And the 7 and 4 makes 11. That's 111, folks. 5 and 6 makes 11. That's 11. Very ritualistic. What was today? 1, 19, 11. That's 11, 9, 11. It's just, you know, ritualistic stuff here, folks. And, of course, that was my first fake print, in case you guys didn't know. And of course, what date was that on? 1/11/2010. And it actually pierced it. That's why I said you guys shouldn't panic. It pierced it and went to 1044.50. So it pierced it a little bit. So we did the same thing with the upside print here. We pierced it, went up to, what was it, 118.38 or something. I don't know. So we pierced it a little bit. Big deal. Let's see. Maybe it's here. That one's done. I think it's this one here. Ah, here it is. Down here. 106.46. This is the print. So this is where I think we're headed for our first major wave one down over the coming week or several weeks here. Ain't going to happen all at once. You're going to have some wild gyrations. But probably I would estimate that probably by the end of the month that this wave would probably start. So probably somewhere around that Legatus pilgrimage of February the 3rd through the 5th. That could be a good time for this to start, to take a nice wave down to that area right there. So, and then after that, you know, maybe a nice up move before later in the summer we see the move on down to 8,300. So if we kind of, so the likelihood is that we're going to kind of go down here and hit somewhere in here or here would be a guess for some support, and then back up, and then back down, and then back up, and finally back down. We're going to make 5 waves, I do believe, and I think we're going to hit this 1060. It's where it's going to be, and then we'll have a month or something up or something like that. So, but anyway, let's get back to the short term. We are resting on support. The 60-minute is oversold in all the areas except the MACD. and it is wanting to go back up here, and it could curl back up at any time here. It could continue down, but I don't think that's going to be the case because the bulls have still been in charge, and because of the light volume, and because of the fake print. So the 60-minute, we should see this kind of turn back up and kind of work its way back up. I expect this market to go up to this fake print area, which is just shy of hitting this top again, and then roll over. And I'm talking about this new fake print that is right here. Okay, that is on the SPY. That is 129.53. That's where I expect it to go to, probably tomorrow. That's what I'm looking for it to do, to shake everybody out. And this is going to be perfectly normal. So the 60-minute says we should go up tomorrow. The 15-minute says we should go up. Look at where it's at, folks. It is -2 here. It's buried. It's very buried, very deep down here. It's pointing up here on the 20. It is put in positive. Positive divergence. I can't remember the word I'm trying to say. Positive divergence. As the markets went down, it's put in positive divergence and took up. I think it's going to pop it up tomorrow. 5-minute chart, not really seeing a whole lot there. It could roll back over, but I don't think it will. Look at how long it's been all this time down here at -1.5, down at -2.0 at one time. So it needs to pop back up to get up here above the 1.0. So it should go down, put in small, or just put in more like this right here, up, and just it should probably stay up all day tomorrow. For the most part, I believe what's going to do, stay positive all day. If it dips down any, if it goes below zero any, it would surprise me. Tomorrow, I do expect it to go up. So where is that going to be? That's going to be probably, let's see, if that was the pop up right there. That's according to the fake print. Not sure exactly where that is with the open right there. That looks to be 129.53. It's hard to judge these and guess exactly where they're at because they're not exactly right. So somewhere in this neighborhood right here, just shy of this top again. That's where I expect it to go. And it'll probably do it in 3 waves. It'll probably do, a move, and then there'll be some bears get on board, push it down, and there'll be another big move. And this will probably be based upon the time period as well. So, it'll probably jump in the morning. Bears will jump on board, short it, and it'll go down to probably about the 10:30 to 11 o'clock time frame at most. And then it will turn and float back up the rest of the day. That's probably what's going to happen until it squeezes them all out. It's going to let them on board. So you might see it may possibly a gap up tomorrow, or just open a little bit higher and then it run up, get overbought, dip down. As it dips down, bears get on board, and then after they're on board and the volume kind of lightens up after the 10 to 10:30, 11 at the latest time frame, then I could see like a C wave push it on up. So like an A would be like your gap open or something like that, then a B down, and then a C up there to that fake print to kind of squeeze them all out. And of course, this is all just trying to put all these pieces together. Nothing is written in stone, okay? But so that's what I'm looking for, is to move up. I'm just going to sit and wait until I see this hit, and I do expect it to be hit tomorrow. Look at this right here, folks. These moves down here, we're telling you, look where we went. We went and pierced it. I mean, I should have spotted that. I really wasn't paying attention. When I bailed out here, well, actually we went deeper than that. What am I saying? We went on down to here. We went on down to another leg, so we went on down to here. But maybe that was what I was thinking, was that we were already hitting that, and so. But we did go deeper. We went down to here and hit this bottom here. The only, the reason I think this is a valid fake print is because right here at the open is around not 129.43 or something, and then the previous, so that's right there at the open. This print is not at the open, so it's not what you call late fill. It's not equal to the open, and it's not up here at this gap window either at 129.70. It's neither. It's just somewhere dead set in the middle. It doesn't correspond to really anything. So that's why I think it's going to go up, and I think that's our upside target. So if you're, your bears, just be aware that we could have some upside tomorrow. Now, if it don't go up that high, then okay, then you won't have to sweat it out as much for those that stayed short. I panicked and got out, bailed out too quick. I'm just so used to not seeing a profit that when I seen a profit, I'm like, woohoo! I'm excited. Time to bail. Especially when I seen that fake print, kind of spooked me. But I should have known. I should have known that that's probably for tomorrow. So anyway, gang, that is what I'm expecting. But it looks like the bear market is here that we've all been waiting for. So just be prepared for a lot of shaking out right here before they finally dump this market hard. And then when I think they finally start dumping it hard, I think we're headed down to that first fake print. I think that's our target, and it could be end of February, March. It's hard to say, but that's just speculation again. So we'll see. Just take it one at a time. Of course, if you went and got you some March options, I'd say you'd probably be fine. I'd say by March, just based upon the counting the days right here and how quick this fell, I'd say we hit that 1060 by mid-March at the latest. So if you got March options, of course you don't buy the 106. You just got to get something, whatever, if you wanted to hold it. But I won't. I'd rather swing it in and out. It's just because there's going to be ways in and out, and you're going to get shaken out anyway. So you might as well take your profits when you can and go ahead and wait for another move up. Even this flash crash over here, I mean, after it went down, it turned and went back up and then went down again. So if you're not playing options, you're just holding, then if you're just holding, straight ETFs that's not leveraged or something, some bearish ETFs, then you'll be fine. Then just wait for the 1060. It's going to be hit. And then after that, you can just get out and set on sideline for a while and wait till a nice major wave 2 comes back up, and then get short on it whenever we try to figure out what it tops at, and then just wait for the 8,300 on the Dow, because that's going to happen. So anyway, guys, that's all I got for today. So everyone should be happy. Just be aware. Tomorrow's likely shakeout day. They're probably going to fool you with some bogus jobs numbers, and there's likely to be an up move. If there's not an up move, then I would be surprised. It would shock me. I'd be concerned, especially with the fake print telling us that they're going to take it up, and with the light volume. I just can't see where they, wouldn't take it up to shake some of the bears out. And remember, it's a good thing. If they take it up tomorrow, that's telling you that this top is finally in. Because when they go down very nice and pretty like this again, that's telling you get ready for another couple of months of a ride higher. And you don't really want that. You want it to go up, down, violently up, down, then finally puke. So puke, Mr. Bull. Tomorrow is your last day, hopefully, to make her run higher. Anyway, that is it, gang. Good luck and congratulations to everybody who made a profit. It's well worth waiting for. And I'm glad we finally got that fake print out of the way. See you tomorrow.